Well, let's get the party started here today. It's Friday, February 26, 2021. Welcome to the Pre-Market Rundown. I'm Andrew Horowitz, and I am the host of this each and every Friday, as well as the fact of the co-founder of TriggerCharts. So we're going to go over a lot of things today, talk about some of the important items that are moving markets that have been quite volatile over the last couple of days. I mean, really, seriously, if you look at maybe just the indices, you'll say, wow, that's pretty ugly. But if you look at some of the underlying stocks under that, we know that about 80% of a stock's movement can be attributable to the movement of an index. And that makes sense, right? Because we know that indices that are passively invested have all the stocks in it, whether you look at the Russell or the S&P. Bottom line here is that you're going to see a lot of movement today. I think we're going to see a little bit of a bounce as we're seeing in the morning. Futures are up now on the Qs 137 points or 1% after a major blowout yesterday. ES up 17 and the Dow Jones futures are up down slightly a little bit. Fair value up a little bit. Let me mention before we go any further that this is for educational purposes only. It's not a recommendation to buy or sell any security at all. It is nothing more than a discussion of some of the indicators we have available at TriggerCharts. You can always find those at TriggerCharts.com. More information there, as well as on the trading app store for TradeStation. We are the #1 highest rated overall indicator on the trading app store, and I think that says a lot for what we have. For those of you that are new, by the way, you can get a 10-day free trial. I put in the chat a link. I'll do it again here so see it pop up. I believe that you will find it right there. You can find the full list of all the indicators that we have available. And I really encourage you to check those out and try them, from the Commander series to the altimeter and the aileron and the radar. That's all. Some of that's package. We'll show that in a second inside of there. All right, with that, let's take a look, as we always do, of what's going on. I also want to mention in the chat, if you want to have us take a look at some of the things that you're looking at, let's try to mix it up a little bit. If you have a couple of stocks that you've been asking us about over the last few weeks, let's kind of try to mix up some other ideas. I want you looking for other ideas. One of the hardest things you have as a trader, sometimes even as an investor, is finding ideas, whether it's on the long or the short side. And I've told you this before, I'm going to show you this again. I look at this on a regular basis, which is just a screen that I made, or a workspace that I made, that basically has what we call hot lists. And these hot lists will give me what is trending. Now, this is all pre-market right now. It gives me the volume, the trades, what's happening. But we can see that Gamestop, for example, is on the upside board today of the percent gainers one day. This on the bottom is the percent losers on the daily basis. And when you look at this, you'll see that we have names like Golden Nugget and Marin Software. What else do we have in here? Guardian Health. These are moving down. These are moving up. There are different ways to do this. We see that Etsy's on here, one of the names that I put on the list to discuss today. You can change this, and you can drop down this list and see that there's a whole host of things that you could do. Things related to volume, things related to volatility, and things related to price. I have it set that I like to look at what the winners and losers are for the day. So that's something that you can do as well to get some basic ideas for trading. All right, what's going on? Hey, you know, I've talked about this, and on my other podcast, I've discussed this whole idea of a SKEW event, or Kurtosis, which sounds like a funny thing. And basically what we're talking about here is the idea that what if there is an interest rate event? For example, what happens if we see that interest rates start moving up dramatically? I tweeted this yesterday. Yesterday we did see the 1.5% 10-year Treasury rate breached, and it just shot up the rate. Came back down. I think it's trading about 142 or 143 this morning. But that's significant. You may say, well, what's 1.4%? Who cares about that? Well, the narrative for a long time has been that we can sustain and maintain these kinds of valuations that we all know in our heart of hearts, in our brains, in our guts, that is kind of lofty. So with that in mind, what was one of the reasons? The main reason, one of the reasons, was that, of course, there's a lot of liquidity out there, but rates being low help to create an environment where multiples can be expanded dramatically. And the reason is, without going to all the gory details, is when you calculate a discount model, you utilize what's called a risk-free rate of return. That risk-free rate of return at 1% changes the valuation and the potential valuation of a stock based on either earnings or dividends, whatever you're using in your discount model, from let's say 1% to 1.5% is a pretty significant change in overall valuation. Now, the narrative for a long time, again, has been that, with low interest rates, we can sustain and maintain this kind of valuation, even though it stretched dramatically, that everybody knew. And then the narrative changed. It changed to, with higher interest rates, as we're seeing it, that's a really good thing for stocks. And the reason for that they started talking about was because that means that the economy is doing better. We have a growth situation. The reopening trade is really working. And now we have pent-up demand. All this stuff was thrown at us, and that lasted for about, a month until somebody said, I think, somewhere, well, do you notice that the king over there has no clothes on, right? Well, I think that narrative was busted this week, and that's why we're seeing such volatility in markets, with the reality that and the acknowledgement of the fact that rates moving higher is a concern. And whether or not, more importantly, the Fed has lost control of the rate environment. They're talking about, of course, this week, Fed Powell had 2 days of testimony before Congress, and he talked about how there was this situation where they're going to be keeping rates down for a long period of time, and they don't really have a plan for it. They're just going to look forward to see if inflation pops up. I don't know what that means. But we did see that spike above 10%, and we have what's called asymmetric risk that is taking place. There's a lot of bets on binary outcomes that are happening. And we look at either if this happens, I make money. If this happens, I make no money or I lose all my money. It's kind of a win or lose. It's no gray in there. And this binary outcome has been, hey, press the pedal to the metal in the equity markets, utilizing options. Let's lever up. And that is what is starting to kind of come out of the markets right now. Now, whether or not that is a long-lasting situation, I would venture to say that if I know anything, I know this. The Fed, under Powell, under Yellen, under Bernanke, has all done the same thing. They've really said, basically, we really know that we don't have any specific way of keeping inflation higher than the numbers, but we're going to try our best to do that. And when you look at the markets and you look at what's gone on, you look at the inflationary numbers compared to what they've done from quantitative easing as well as the low interest rate environment, they haven't been successful. Japan wasn't successful, but they're just going to try no matter what to keep on doing it, to figure out some way they'll do it. Now, with the combination of I think the combination of low interest rates and fiscal stimulus, the money, the 1.9 trillion, the 900 billion, the 4 trillion that may be coming, that is causing inflation. And we can see that combined with a concern about the limitations on the supply chains, what's happening with chips due to the pandemic and the lack of orders. All of that is creating inflation. We saw PCE prices come in a little bit hot today. PPI prices come in a little bit hot. Last week, CPI kind of coming in hot. Lumber prices off the charts. Commodity prices off the charts. So what we're seeing is while gold is kind of coming in a little bit, silver's coming in a little bit, Bitcoin's coming in a little bit, dollar has been soft, there is a general sense that there is inflation in the markets, or it's going to be there. And this asymmetrical risk taking that's gone on probably has to unfold a little bit and kind of come back. And basically, the air is coming out of the high multiple names out there. And we've been seeing that with things like even Apple and Facebook and Tesla. Tesla pretty much top-ticked their numbers when they said they were buying all that Bitcoin. Look what's gone on with those companies like the PayPal, maybe even a Square to a degree. Look at MicroStrategy. I talked about those. It would have been a little painful to stay in there with some of that, but if you were very nimble moving in and out of that, you had a great move on that. I'll show that in a bit. To the right-hand side here of the charts, and let's kind of take a look at this, and let me do our little spotlight jobby here. You'll notice that I drew a line 312 approximately right there, 312.15, where I was able to draw what I would say was a reasonable level of support. And we pretty much got to there, bounced a little bit through and held. Again, right now trading at 315.71. So we're coming up a little bit above that, probably into this area, next area here. I would say that the potential for this to bounce and move back up into the 318 area is very possible. And from there, we have to wonder if there's going to be another kind of bounce down into the greater area of support here, which in my opinion, if you look kind of 308, let me get this on about 308. right there. That's pretty much the level of support that really seems to be very supportive of the NASDAQ. The KRI did in fact call it. You know, if you've been paying attention here over the last number of weeks, we talked about this cluster formation here. Remember that? We talked about how there was this area of clusters forming, and we've seen that in the past. This was a warning. Now, it didn't mean we were down for an imminent crash, but a pullback was probably likely until we saw that this got either to a point of back into equilibrium, which is where we are right now, or over kind of into the oversold level. Now, obviously, it takes a lot right now for this market with its strength that we've seen, this incredible amount of strength that we've seen over the last few months, going back to November. Pretty much, if you look at this whole range, besides this one little blip right here, it was pretty much a very strong market condition. I'm not telling anything you don't know, but this is going to be a market that is still in an upward bias. If we just simply draw something, just a very quick, trend line here, depending on how you want to look at it, or a channel. We are in a relatively defined channel, tops, then tops and bottoms and tops and bottoms. And I just drew this, freehand right here. So when you look at what's happening right now, you could say that we are still in a bullish tendency on the upside of an overall trend. Until we really break down below here and kind of at that point get into, this area here, which is, this is on the SPY. This is something that I would really say that it still favors being a little bit more constructive on the overall. And I probably could see that also when we look at the Commander series and we look at the SPY, where we look to the right, is why we have shorts building up in the short term. That makes sense. The daily finally pulled a profit. Let's pull this. Pulled a profit right there. Okay, where are we trading now at 384? We have to get back up to 386, up to the resistance level. So you have that nice run that kind of moved up, kind of got a little bit of a gain, then kind of came right back down into the zero line right here. And then right now we do have really good support at 374. Excellent support going back to 370 on the SPY. So that's numbers that you really need to kind of pay attention to. And but the KRI did call it, so we're going to have to watch what that looks like moving forward. Themes: rates. Just say it with me. Rates. That is the big thing that's moving markets right now. That is the thing we need to pay attention to, because there is a bit of a fear out there that if these rates continue to go on here and around the world, and by the way, it's not just here, it's around the world, they're freaking out. If you saw what happened in Asia overnight, pretty substantial moves, and you saw that they're already, South Korea is starting to buy bonds again, Japan talking about things. Again, I would not be surprised if the Fed, if we see any kind of sustained move above where we are, above 150, if the Fed doesn't come in. Remember, they have to fund the payment of the $1.9 trillion stimulus plan. We don't have the money in the coffers of the Treasury to do that. The money's going to come from the bond buying program, where basically they're going to shift right from the right-hand side. They're going to create money out of thin air and put it to the left side of their pocket in the form of bonds. That's how it goes. Money is going to go in, and they're going to basically provide that money to the U.S. government in order to do the things that they need to do. And that is what is inflationary. It's a dollar debasement. It's a currency debasement. It's been going on for a long time. We know this is inflationary. We know that. How much is the question? When I start seeing that gold and silver, for example, and even Bitcoin to a degree, and other assets are selling off with the equities, you know this is a bigger situation. And the moves by companies like Gamestop and the massive option playing that's going on is shaking things up pretty dramatically. Now, even with all of that we said, all of the concern about what's happened over the last few days, February has still been a relatively good month for many of the indices. I think the NASDAQ is probably at this point down. Let's see, we started right about, where did we close? So we closed here at 314. So we'll be up ever so slightly for the month of February. 2021 clearly up about 2% on the year for that. SPACs are deflating. We've seen some of those go on. I still think there's a great opportunity to utilize these as a trading vehicle. Clearly more sensitive to the market movement and the directionality. Too much inventory though. We've seen secondaries come out very significantly from a lot of companies. Rightfully so, with the stock prices as high as they are. It makes sense for management to start issuing some of that to take some money in. And at the same time, we know that there are, I don't even know, 2 or 3 or 4 SPACs, like a day it seems, that are coming to market. That's sapping up some of the liquidity as well. The meme stocks are starting to move again. The AMCs, the Gamestops, KOSS, BlackBerry, you know the names. And this is, I think we are at an overdue correction. You just have to watch your levels right here. Economics, initial claims came in at under 800,000 last week. That's good. Durable goods were banging. I mean, banging last month. GDP was at 4.1%. That's the second number. New home sales. Woo! Selling some homes there, even with lumber prices at an all-time high and copper prices at a high. Houses are selling. People don't seem to care too much about what they're paying these days. We saw some earnings results from Etsy and Airbnb, CRM, Beyond. We got to put that on the list, a couple of those. I think we have. Next week, ISM Manufacturing Services, Fed's Beige book, productivity, factory orders, and here are some of the movers we're going to talk about. Please load up what you want to talk about. This is the Commander series. I always use this because this is my go-to. This is the thing. This is the bomb diggity, right? Basically, when you get it, it's gonna look something like this. I want you to pay attention to this particular chart. Oops, yeah, that's right. There we go. It's going to basically be a top-end radar screen that gives you multi-time frame. Nobody else has this technology. Nobody else creating indicators has the technology. It's a multi-time frame indicator that you put one symbol on a line and it goes across, and it looks right now, you could set this up differently, but 30 minutes, 30 is as a default on the first. Then you got 60 and you got 240, you got daily and you got weekly. Now, if you want to put, everything has to be in a derivative of 30. So you put 30, 60, 90, 120, 240, just looking at the minute charts. Well, that's fine. Can't go under 30 though. That is the one limitation. But let's take a look at this. I look at this. This is the radar, all these fine colors that you see going hard here. It gives me a nice refinement. You notice that we passed right under on the SPY, this yellow line. If you see that, I'll blow it up a little bit. This yellow line right here. Let's see. I'll do this. This yellow line right there. See that one right there? That yellow line right there. This yellow line is an important point. All of these inside of here, when you see yellow, it's a high volume node. This is all based on price and on volume. This is a very elegant way of looking at markets, so you could find out where the players are playing. That's the whole game here, to understand where they're laying their footprints, where they're putting their money to work. And then what we do is, after we look at this radar, what we build here is an algorithm that takes the most highest probability areas with volume and with price, using swing technology and a few other things inside of the calculation to look at this. Now, where are we? Well, we're in an area that is a concern, because I've always talked about this, and you could use, for example, your TradeStation box tool. We draw a box. Uh-oh. Did I do something bad? There we go. We look at this area here, and they're shaded in because that is our zone that we're in right now, right? 385, 85 is the top end of that range, and about 375 is the bottom end of that range. And when we look at that, there's kind of not much going on in terms of what we call lines. Just looking left, there's not anything there. We talk about this 100 times. I'm going to teach you again because I want to drill this home. Look left, look left, look left. Always look left. We're looking this way. And what do we find? When we look at this right now, when I look left over from here and here, I don't see anything, right? There's nothing here. There's nothing in this range right here. That being the case, when I think about what I'm doing here, I have to worry that, you know what, there's not a lot of support. Where is that support? Well, that support is kind of somewhere around this range here, about 370. You can see from a price standpoint, just looking at the bars and where there's connections. Connections are really important, where we could tie this all together, where I could draw a line across and a lot of lines connect across. I could say that's a pretty good level of support. I would think that right now we have the opportunity to move down to about 370 in a really bad situation here. And I would think that when we have the bounce up to possibly this level, which is 385, that is an area we'd want to think about and worry about from an aspect of, you know, is this going to fail? Also, as an add-on, we get the aileron. Now look at the aileron is starting to roll over here. It's rolled over before, then picked right up. From November, again, we've seen a pretty strong momentum trade on the upside. One dip, and then from there we just got working. We got right down to that level of support, 370. And look at this a little bit further out, it was support there too. So 370 is a pretty good number. That's another 5% down from here if, in fact, we do see that continuation pattern. But right now, we're starting to see that this is rolling over. We'll see how that kind of cleans up a little bit over the next couple of days. Some stocks to watch. SPCE. Earnings came out last night. Earnings were not important. The important thing was that they are postponing their first manned test flight until May. I still think there's an opportunity to buy this thing, from a different standpoint. I think that on weakness, even though we are going to be opening up down at right about here, right in this hole right here, I think that, probably 35 is a number that would be an area to look at. But when they postponed it last, it rolled over. They postponed it again. It's rolling over, down about 13%. But if you think that space travel will be something one day, like Richard Branson, something to look at. Interesting. KOSS, tried to make a run up yesterday. If you look at this is one of these meme stocks. What do they do? Who cares? Stock went from, $5. It was actually a lot lower before that, but let's just call it $5. $5. It was 194, about $1 or something. But let's say when $5, it went up to 131 before it came crashing down. Ended up about 13. Tried to make a little bit of a run over the last few days with GameStop, and just came to the bottom yesterday. Finished at a $21 and change, and then $21.53 to be exact. And right now trading at $18.75. GameStop up 9% today. Woohoo! I don't know. Is anybody trading? How do I change my 90 to? Okay, I'll show you that in a second. Nick, by the way, somebody asked me what you do here. So if you want, you can just click on the whole range up here, right click here, say studies, say edit studies, and go to your inputs. Where's my inputs? Here it is. And you go down, there's your 240. Just change that to 90. Is that what you want to do? Oh, no, you want to change the 90 to 240. All right, so go back to the 90. Yeah, well, you can change any of them here is my point. But if you do it for all of them, if you just do it for one of them, if you just click one of these like this, it'll bring up the same thing, but it's only going to change it for that one row. Some people like to have different things for different rows. I don't know why. But if you click the top there, it's a left click, then you right click, left click, then right click, studies, edit studies, open up your inputs, and then it'll give you all this information. You can change any of these numbers you want. Hopefully that helps. Nick, kick me back and tell me if that helped. Anyway, GameStop on here is, I don't know. I don't spend time talking about it because it's not worthwhile. It's just going to move all over the place. It's probably going to make you really nauseous. Workhorse, we talked about this before. I said I like this stock, and this stock just blew out after the federal government I told you, the one thing they were looking for was the United States Postal Service to give them a big order, right? And we thought that was definitely possible. Well, that order went to Oshkosh. Stock just broke down 40% or 45%. Came back a little bit yesterday due to the fact that there was there's a senator or a congressperson who wants to battle that because there's going to be some fossil fuels used in the Oshkosh contract, and that makes no sense. Sunworks, some of the solar companies, this is a really nice chart up until where it got wonky here. But if you look at this, we see it trading within a range, and it kind of clicked down right into that range a couple days back as this was coming off. There's been some recent, and I think yesterday there was some, or last night after the close, there was some solar companies that came out with pretty good results. You look at the solar ETF TAN. There you go. Up a little bit today, bouncing off those lows. They all kind of rolled over with the market here. But SUNW, I think, right now trading at 1405. So let's take a look what that is. 1405 is right about here, right where it is right now. And up a little bit, up 6% for the day. If you can break above, I like the fact there's this little island right here that's forming. Right now, we're in a kind of consolidation in this, so that's something to watch. If you want to play within the consolidation, what I like is that right about here at 1460, we hover it. Let's get the exact number. 1462, there is a good amount of support right there. And what's nice is that the support is closer to the bottom, meaning the lower end of the range has a really good level of support. You break above this 1750, you can be back right to 22 again. I think that's kind of an interesting play right there. Let's see what else we got here. Pets. Pets we marked at 34.69, currently trading at 37, so picking that up off that run. Pets starts to move up. There's really nothing above, looking at left again, above this 39. I would keep your eye on this and keep this. I think that, we're seeing it's long across the board here on the top, right? We got long on the weekly on 4 bars. We got the bias on the daily is 2, and the trade bias on the 240 is 2, whatever you want to choose for yours. Kind of interesting. CCIV, Churchill Capital. Interesting. Can you see this? Look at that. Right down to the nub and the bounce off of this really good long-term support from the beginning of February on this daily chart. You can use whatever chart you want. I use daily for the educational part of this and for what we're doing here today. Basically bounced right off of that here, bounced right off of that 2 times, in fact. If you look at this carefully, we bounced off this twice, and we bounced off this in a pretty spectacular manner, right? Right here and right there. Now, this is not looking great. We see this roll, but that's pretty much because we see this, this roll right from the top here. Then it kind of came down. This was after the announcement that Lucid Motors is going to be being put into this SPAC. Kind of an interesting play here. We'll see what happens there. But I think there's a lot of interest in this. So, above, it's still long. Look, this thing hasn't gone out from the long positioning when it got in there at 20, when 20 for 60. So that tells you something, that there's a lot of volatility, but it's kind of a little strange what's happening there. Bitcoin. Yeah, we clipped under 45. It's currently trading at 46. They try to pick this up anytime they want that it drops. Etsy hit the line on the bottom yesterday, bounced right off, up 12.5%, out with earnings at 221. Where is that? Oh, it's all the way up here. 221 and change, right about there. Etsy has been a great performer if you kind of back this up. And obviously, technically, when earnings come out, there's not much you can do about things. Let's see if there's anything else that I want to talk about here. No, let's talk about your stuff here for a second. SKEW. Somebody said to me the other day, why don't you look at shorting that? That would have been good short right there. Because they were making fun of me because they said something about how some of these companies were buying all this Bitcoin. I said, well, you buy this Bitcoin, maybe it's not the best idea. Did close down to the line right there at about 229, just under it here. So has some support. There's some support on the 50-day moving average on there, which I'm not showing. Overall, we're seeing the same roll. I mean, every stock pretty much looks the same right now. RKT came out with earnings this morning, I believe, up 17%. Look at this wide range that we drew once upon a time here. This stock is a 19, heavily shorted stock, currently trading at where? 23. Oh, hello, way up here. 23.50. So you're getting towards the top range of a recent IPO that came out. Actually, I went to 34, actually. So you're getting into that top range. 25.30 is where I said the breakout is, where you want to start looking at this all over again. Copper futures. I mean, what's wrong with that, right? I mean, down a little bit today, but yeah. I mean, going from 3.5 up to 4.3. We got our first position to take profits here in a long time. The long position got entered into at 364. You're out yesterday at about 420 right there. Nice little run up of copper after a long-term consolidation. We see that basically within this range, if you look at the consolidation point here, and then a takeoff was very nice. And once you got really above the 380 was kind of the signal there. We see this with copper many times. You saw it again here. Pretty good consolidation in this range on the right. We're still seeing that it's pretty much poised to move up, and if we do have an inflationary environment, well, copper should do pretty well. What else do we got? Anything else in here? Okay, we got Tattooed Chef, again, looking the same. We talked about this briefly, kind of rolling over. Beyond Meat came out with earnings. Where are they? Up 8.5. This is just an ugly-looking chart. I mean, you catch it, and they make an announcement, and then something doesn't happen, and then it goes well, then it doesn't go well, and you just can't really pay attention to this chart. To be honest with you, there's too many gaps in it. When I see these gaps, I just turn off, and I'm like, okay, can't do it. Nope, not looking at it. So that pretty much wraps it up. Please do me a favor, go over to the Trading App Store, check it out, see what's available for you, and have a great day of trading. Coming up on the open any second now, I think we're going to see a lot of very wide movement on the markets today, especially probably into the close. I would pay attention to what happens probably in the mid part of the day from the 11 to 2 o'clock and see how that's trending, what's happening. I think that will probably have a significant buy on the open. We'll see then a dip down, scaring the crap out of people, which is what is intended to happen. Get out those weak hands, as they call them, the paper hands now, right? And then see about possibly turning this thing up into the end of the month. Don't forget about that. Hey, thanks so much for joining me, and I am going to see you again next week. Have a great, great weekend.